Hello traders and welcome to another video review. Today is Wednesday, January 24th, 2024. Let's find out what is going on the economic calendar today. The most important events of today are Germany manufacturing PMI data scheduled for release at 9:30. The market participants expect a hike here from 43.3 to 43.7. A slight improvement is expected. Manufacturing PMI data from UK are scheduled for release at 10:30, and this time the same situation is expected from 46.2 to 46.7. This manufacturing PMI data should be improved. Services PMI data from the USA are scheduled for release at 4:45, and this time we expect a slight deterioration from 51.4 to 51 points. Key event of the day: Bank of Canada interest rate decision scheduled for release at 4:15. Market participants expect the Bank of Canada to hold the interest rate at the level of 5%. Crude oil inventories data are scheduled for release at 4:30, and as you can see, a slight deterioration to minus 2,150,000 barrels is expected. So, pretty busy day for today. There are some very important data for release from major economies, so we should do the technical analysis of the major pairs and of course the crude oil, because there's crude oil inventories are scheduled for release later on. So let's start with the euro dollar. The 4-hour chart of the euro dollar is showing us deterioration of the euro price. We went down towards the level of 1.0822, and now we are bouncing from this level because that was the last line of support for the bulls. We almost hit the extremely oversold conditions on the 4-hour chart on the RSI, and since then the market is trying to move higher. Please notice that we are about to hit the technical resistance at 1.0880 and then 1.0888, and then even there is the next local technical resistance located at the level of 1.0917. So this level will act as the technical resistance as well, just below the 100 periods moving average, which is located at 1.0915. The key technical resistance remains still at the level of 1.1020 basically, and the market participants needs to break back above the trend line in order to move higher basically, right? So there is not really any kind of a pattern here. For the bulls, we got hammer, we got bearish engulfing, we got pin bars, and we get pin bars here, we got bearish engulfing here, but nevertheless this is not like a valid pattern to me. Nevertheless, let's move to the British pound. British pound keeps moving inside of the range. The range is located between roughly 1.26 1.28, and it's been quite a lot of time, at least the second half of the December 2023 through the beginning of the 24, then decrease in the second part of the January, and now this kind of a movement here is being continued. So basically only daily range can be let's say placed here. 1.2746 is the upper level for the daily range, and 1.2648 is the lower level for the daily range, and for that there is no cure, because the market must wait for the fundamental trigger to move higher or lower. Momentum wise, we are just hovering around the level of 50. If we go too deep, then we bounce. If we go too high, then we deteriorate. So it looks like there is trendless market here on the British pound to US dollar. We are waiting for the trigger to show us more focused movement, more directional movement, either to the upside or to the downside. If we zoom out, we can clearly see that in the background there is a very nice beginning of the uptrend here, at least the one that started at the beginning of the October 2023. So this kind of a horizontal trend might be a part of some kind of a pause, some kind of a corrective cycle before we will resume the uptrend. Crude oil. Let's take a look at the crude oil. As we know that the crude oil is roughly trading inside of the trading range as well. The local technical support at 73.56 had provided the support, so the market is still trading above this level and above 50 and 100 periods moving average. Momentum is positive, however, you can see that the market tries to test the level of 50, so this is why, there you go. And this is why the bulls are still slightly in charge in the market, so the outlook is lightly skewed towards the bullish side. Okay, if we break above the upper orange line, then of course this movement to the upside might be even increased. We can then test the local high located at 76.13. Nevertheless, there is still most likely the very whipsaw trading market, very non-tradable conditions, because it looks like this market is very quiet. There's no directional trend, neither up nor to the downside, so we need to wait for the fundamental trigger to do something with this current price action. And last but not least, let me just take a look at the S&P 500, because we are on the highs again. So the S&P 500 has made another higher high and all-time high located at 4,867 points, and this level was made on the extremely overbought conditions, at least on the 4-hour time frame chart. If we take a look at the daily time frame chart, we can clearly see that this market is right now doing the negative divergence between what is price doing. We got high here and we got all-time high again made just yesterday. The momentum is lower, way lower, so it looks like there's some kind of a correction is needed here for the S&P 500, and any situation like this might simply turns out to be in favor of a bulls. Moreover, there might be some sort of the, let's say, ending the diagonal on this market right now. This pattern should be, let's say, in progress. So this kind of a market might be doing something like that. So as far as we remember, if this is the ending pattern of this nice uptrend, then of course the result of this movement to the upside might be a little bit bearish, because we should sharply decline towards the first technical support, which is located at the let's say level of 4,612, but that might not be quite enough for the bears. The next one is located roughly around 4,539, so that might be the target for the bears. Otherwise, the trend on the S&P 500 and the rest of the US indices is of course up. The trend is intact. Nevertheless, maybe it is a time for a little bit of the correction, a little bit of the pause after the all-time high was done just yesterday. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.